All right, here we go, and we are live. This is Travis Witherspoon from Carter Cow Trading, Carter Cow Capital, Trade with Travis on YouTube. Hope everybody's doing very well. I do apologize for being late. My sons ended up eating yogurt, and they put yogurt all over their face. So had to clean that up a little bit. But let's go ahead and go through the disclaimer. I do apologize. Well, yesterday we was out. I'll talk about that in a quick second, and then after that we'll go ahead and go from there. So let's go ahead and go through the disclaimer. I'm not a CTA, so I'm not going to tell you whether to buy or sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision. Understand that Forex involves risk. It involves risk of being able to make money, also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to end up making money today. So showing myself onto the screen. Hopefully everybody can be able to see me. I can see myself on Facebook. We won't do it on Instagram today. And I see myself on YouTube. Hopefully everybody's doing very well. I do apologize for not being able to do a Trade with Travis session yesterday. Actually had to go to the DMV. I had to get my new license, so I ended up having to go through that. And what I ended up finding out was that because I have a CDL, they end up allowing me to be able to do it instead of kind of doing a appointment, because the next appointment that they had was December the 3rd. December the 31st. So I wouldn't have been able to do it in the first place if they end up doing it like that. So end up taking a day to be able to get that done. Also, notice also end up getting my hair done. Did some barrel rolls on this one. I'm 5 months in. My birthday is in 2 days, so I want to do something a little bit different. But with that being said, I'm glad to see each and every one of y'all. I'm glad to hear from each and every one of y'all. For the people that are watching right now, make sure you drop in a comment, say hey or anything else like that. It would be nice to be able to talk to people while we're actually doing this. So with that being said, let's go and talk about our Forex Bootcamp. Remember, our Forex Bootcamp is going to start this upcoming Monday, November 23rd to November 27th. We're going to go from 9 p.m. to 10 p.m. each and every day. Each and every day, we're going to end up having a task that we're going to end up talking about to be able to help you bridge the gap between being able to understand or being a beginner when it comes down to trading to fully understanding how to be able to trade in the Forex market. So if you're interested in being able to understand how to be able to do that, you can be able to go to this event link that I'm going to replace inside of the actual chat box for Facebook and on YouTube. There it is on Facebook. I'm going to replace it in on YouTube as well. Here it is right here. And I'm going to replace in the actual link when it comes down to if you want to be able to purchase the tickets. Now, remember, each session is basically $20, and basically what that end up equating to is basically $100 for the overall session. But within that session, what you end up receiving is that you will receive all the videos that we end up doing. You also end up receiving my book, Success in Forex, and you will end up receiving a free brokerage account plus our strategy on what we end up doing from a scalping standpoint that you can be able to do on your phone each and every day. So take advantage of that opportunity. Really done had a lot of students that have fared out very well when it came down to that. Excited to be able to bring on more people. Okay, so let's talk about what ended up happening yesterday, and let's talk about what ended up happening today. If you look at what ended up happening on yesterday, we ended up having news from the pounds. We also ended up having news from the Canadian dollar. All of this news was basically in the green. Everything ended up being very good for pretty much everyone. Consumer price index ended up being higher at 0.7. We ended up looking at the consumer price index for the Canadian dollar. It actually ended up being up as well. Also, we ended up seeing that unemployment change and employment change actually were very good when it came down to the Australian dollar. You would think that would actually mean that they're going to end up moving up in the overall value and you start to see more people actually end up buying. That wasn't the case yesterday. We actually ended up seeing that the US dollar started to get a little bit stronger once again, which to me doesn't make any sense. We also ended up seeing that the Dow and the S&P and everything else also end up falling off another 300 points because of COVID cases and everything else like that. But when they're talking about medical cases as well, they're talking about the vaccine is about 95% away from being, or 95% when it comes down to trials and everything else like that, which means that that's affecting the overall indices market as well, like gold and like silver and everything else like that. So the market is still in a flux of being able to be in consolidation. We're going to show that, and I'm going to show what that actually means for us being able to take a look at the market and trying to figure out what the heck is actually going on, and being able to go from there. President Lagarde is going to end up speaking. She's already done spoke at 3 o'clock. She's going to end up speaking at 10:15. Then after that, we're going to end up having a New Zealand general election that's going to end up happening a little bit later on today. So we'll see how that's going to end up affecting the New Zealand dollar. If it's anything like our election, hopefully it doesn't run 3 to 4 days just to be able to see who's going to end up being the new president. But we'll probably see something going into Friday. So that's what we have today. We have initial jobless claims that's going to end up happening for the U.S. dollar. And once again, because it's going from October, we'll probably end up seeing that this will probably be down again. Remember, November and December are typically the times when you end up having upbeat in jobs, especially with the holidays and being able to make sure that you can do a lot of shipping and stuff like that, like UPS, Amazon, and a few other places typically end up hiring throughout this time. All right, so let's take a look at the charts to see what's actually going on. We look at the U.S. dollar index. We end up seeing on the weekly that the market is still considered to be bearish. We end up having a breakout. We had a retest, and then after that, we started to have a movement towards the downside. But right now, what I'm looking at is that this is basically a indecision candlestick at this particular point. The market fell and broke past this overall line, which is the actual low of 11,911. Since then, the market has pushed back up inside of that overall zone. So what I'm looking at is this. It seems like the market is just going to be hovering between this 1,200 zone and this 11, and basically this 11,900 zone, and trying to make a decision on how the market is actually going to end up moving through there. With pairs like gold, with pairs like the euro, United States dollar, US yen, and everything else like that, what does that mean? Means that the market is going to be in consolidation. Means that you're not going to end up seeing necessarily the overall trending movement that you would love to be able to have. And we're seeing it right here. We can see that the market ended up giving us that rejection earlier this week, and we've seen the fall, which meant that the market should have been bearish when it came down to most pairs. But now what we're seeing is that this market started to push back up as well, which means that if it keeps on doing what it's doing right now, it's going to end up being a bullish engulfing candlestick, or at least it started to be a bullish engulfing candlestick overall. And if that remains to be the case, then that means that the market could push up to the support of 1,200 again, and then make the dollar a little bit stronger. The stochastic right now has really not given us any type of help, so we should not be looking at that overall. But if I had to be a betting man right now, I would say that the U.S. dollar is going to end up being stronger over the course of the next couple of days, because it fell down literally at a support level and then pushed right back up. It might have pushed back down, but the buyers was able to hold it back up right around this 11,910 area. Something to be in mind about when you're looking at overall pairs. Let's take a look at what's happening with oil. Oil at this particular case. Remember, I ended up talking about that it's just been crazy to be able to look at. We ended up seeing that this market was in consolidation. We had a consolidation area of 41.37 where the market was actually falling down to. Since then, the market has pushed past the 42 area. Then after that, tried to be able to break past the 41.87 area again. So I'm going to say that 42 is not a new resistance. With 42 being now the new resistance, then that is where our actual area would end up being for the total resistance, or where the market would basically just see where we're going to end up having a few more sales actually be in. So I'm just trying to pay attention to that a little bit more. The support's at 37, but right now we can see that this market has went through basically an ABCD swing a couple times, and it may end up breaking out of this overall area. Currently, the market is still in the sell zone. It's at 74%. Typically, we've been seeing that this market has made movements once it got into the sell zone and actually fell back down. But right now, if you're keeping it in mind, we're actually in the holiday season. With us being in the holiday season, there's going to be a demand for oil. Since there's the demand for oil, then that means that the prices are going to end up relatively staying high. And if that remains to be the case, then that means that gold is probably going to end up breaking out of the 42 area. So right now, I'm going to end up saying that it's going to be bullish. But right now, we're just looking at the overall market. There's really no indication of decision when it comes down to this overall pair. Let's take a look at gold. Gold has been very disappointing. Nevertheless to say, we end up looking at this overall movement. We're seeing that gold has broken past the overall A of the daily, which means that the sequence has been broken. With the sequence being broken, then that means that the market could fall down bearish and break below 1850. If it breaks below 1850, then it's truly going to end up being considered to be bearish, especially on the daily. You look at it from a weekly standpoint, the weekly was in the buy zone. The weekly had been moving in the buy zone. The weekly, we look at this overall sequence. We've had 8 different times where this market has completed this overall sequence to the upside and started to push up. We talked about last week, well, a couple weeks ago, the market ended up breaking out. We talked about the retest and how it held above 1888. And subsequently, since then, the market has broken past that 1888 area, and it has broken to the downside based off of this overall movement. Now, where are we at when it comes down to the weekly fibs? The weekly fibs are still good. The weekly fibs are still in a position to where it's somewhat, it's at the 5-0 level. It has not went into the sweet spot level. If it goes into the sweet spot level, then it's going to go to 1824 or even lower than that when it comes down to that movement. If that's the case, then you actually would want to be either out of the market or still looking at being able to find sellable positions to be able to hold into this market. Now, that kind of goes away from what I ended up saying earlier this week, because I believe that the market was going to end up being bullish, and I thought that the market was going to end up pushing out in 1900 and then start moving up to 1920, up to 1960. But now we see that that's going to end up being a major resistance level that the market has to be able to break through, as well as being able to break through this 1880 level right now on a daily, because right now it has went to that level and then it has rejected. Now, going back to what I ended up saying a little bit earlier with the U.S. dollar index, if this market is considered to be in consolidation and the market is going to end up pushing up for the dollar, then that means that gold is going to end up going down. What would be factors that would make the gold or anything else like that get stronger? More coronavirus cases, more lockdowns when it comes down to certain areas, and also, you will have to end up having some type of news that will end up being fearful to people to where they wouldn't want to put their money into an actual currency and actually want to put it into something that's a little bit more safer, kind of like gold at this particular point. So right now, what I will end up saying is, if you are in positions, and mainly talking to my masterclass students, I would look at being able to change your systems. Definitely would change it from being all long, and I would just place it at long and short, and see how the market is going to end up reacting when it comes down to that. Anything below 1850, that means that the market is truly bearish. I wouldn't necessarily change it to just say all sales, but I would look at being able to make sure that you have more sales in than buys at this particular point. Right now, I'm currently down on my pair as well when it comes down to this. It's unfortunate because obviously we end up having that big movement. We've been kind of paying attention to that. Silver, it's the same thing. Silver got hit a little bit harder than what gold did, but it did fall back to that 24 area. And if it breaks below 23, then quite frankly, it's not in a great position as well. So something to be able to pay attention to, obviously. Let's take a look at the U.S. dollar index, or let's take a look at U.S. dollar pairs, and let's see if we have any opportunities on being able to get in towards the overall market. And we're pretty much seeing the same thing. U.S. CAD is still in consolidation. It fell down to support about a week ago. Currently, right now, the market is in the no trade zone and in no type of position to be able to buy or sell or do anything else like that. The only thing that you would look to be able to do is possibly scalp the market. But even with that, it's not in the greatest position to be able to do anything. So U.S. CAD, not necessarily looking at that. U.S. yen ended up doing very well for us being able to sell, but it fell down to another support level at 103.75. Since falling down from that 103.75, it has pushed back up. And from pushing back up, we should see that this market hopefully should fall overall. But this is kind of one of those same situations. We said that if the market broke 104, then I thought that the market was really going to rush down and break another fall. But what we really have seen is more of a W pattern right here, where we had a double top and the market has fell down and then popped back up to the upside. Now, this remains to be true, where you end up having this movement back up, back down, and then back up. You will end up seeing that this market will end up going back up to the 104.89 area, to the 105 area, as we're looking at it. So this market actually, in my mind, is actually more short-term bullish. Obviously, it's long-term bearish. We've still been saying that it's long-term bearish, but we should see a movement more toward the upside if that does happen. Taking a look at the Euro United States dollar. Market has a resistance of 1.19 and a support of 1.16 overall. This market is in the no trade area once again at 1.18 currently right now. I wouldn't be looking at any type of trade at this particular position. I know that it's above this overall trend line, and we end up buying it up to 1.19 and made money last week when it came down to that overall movement. But right now, there's really no perfect position to be able to say that you should be looking to buy or should be looking to sell. So with that being said, I will actually end up turning off my systems when it comes down to this one, especially if you're doing automated trading, because there's really no direction. Once there's a direction, it makes it easier for the systems, for any type of system, to be able to catch on and be like, okay, well, I should buy or I should sell, and we should be able to make money off of this. But right now, with the market being in a considerable position of just saying that it can push up to 1.19 and then break out, or it can just fall down to 1.16 and then this fall down, and we're basically in the middle of that, then quite frankly, you're really not in any type of good position to be able to trade at all, because there's no direction, and you're not at the resistance, or you're not at the support. So I'm going to stay away from that one as well. US dollar, Swiss franc, we're looking at this overall pair. We have a support at 90. We have a resistance at 92. The market is at 91.20. We talked about being able to see if this market will end up falling down to 90 again and possibly giving us an opportunity to be able to buy. That means that the US dollar has to get weaker. Right now, we've seen that the US dollar has remained to be strong, and every other pair has basically been at a particularly weak point, or particularly this stagnant point as well. So really no pair to be able to take a look at on this one. So staying away from that one. Australian dollar, United States dollar, we end up seeing that the market end up breaking past or getting towards the resistance, and we have a new defined resistance right here. And quite frankly, we can see that this area, right around that 73.50 area, has been a stranglehold of a position when the market has really kind of failed up here. We've had some support, and that support basically being at right around 72.50 as well. The market is falling back down to 72.50 as we look at it. What does that mean? Market is in consolidation. The market is in consolidation at this particular point. We can get rid of that. That doesn't matter anymore. And we focus in on this area. There's not a lot of winnable trades that you can be able to do at this particular point unless you're looking at scalping the market. This is not the time to be able to put all your money out there and be like, I'm just going to go ahead and trade it just for the heck of trading it. Quite frankly, I think that's a losable position to be able to have that when it comes down to this. We need to get more direction, and until we end up getting that direction, it's kind of hard to be able to choose anything on that one. When we take a look at what's happening with the pounds. We said overall we want to be able to look at buying long term. This market has not fell inside of the buy zone. We see that it's starting to get a little bit of a sediment change because the market fell down to 1.30 and then pushed back up to 1.32. The D extension's at 1.33. Currently right now, when it comes down to this overall positions, this is not a great position to be able to get into either. So kind of stuck on that one. Let's go to the indices. I don't want to look at the U.S. market anymore when it comes down to that. If there's no positions, then I'm not going to keep on harping on that. Looking at the NASDAQ 100. As we go through and we take a look at this market ended up falling from 8,200. Ended up going from 8,200 all the way up to 12,000. Currently, right now, we was talking about that bearish crown that was basically forming up, and it had not been broken yet. Right around at 12,400. Subsequently, what happened was the market ended up falling, pushing back up, creating a right tip movement. And then after that, created a new higher high from that movement. After that, what we've been looking at is that this market has just been continually, gradually going up. We got a counter trend line break to the downside right now, and we probably might see that the market will fall down to this point of control at 11,372. If we're going to continue to see people getting out of this market and overall not understanding or not seeing what direction it's going to end up being, then you're just going to see people start to look at being able to sell or get out of the market in general. If they get out of the market, then that means that the market is going to end up selling. If they end up taking sellable positions, then that means that they possibly could be able to ride that up. Possibly could be able to ride that movement. So overall, let's see what's happening on the daily, because if we look at it, the daily is kind of lined with the market kind of falling at this particular point and going toward the downside. Now, if we're looking at this overall movement, there's a counter trend line break that has happened to the downside. the market on a daily did not go all the way up to the 80 position, but there is a sentiment change, which means that the market could fall again. The market has failed in a common area at this particular point. So 12,000 now is the new 12,000 now is the new resistance for this overall movement. So if the market is going to end up being bullish, it has. If the market is going to be bullish, it has to be able to break past that zone. The low will end up being basically at 11,000 for its overall movement. So that's what we have. We have basically 1,000 points for its overall position of where the market could be. If I'm banking on anything, I'm banking on the market falling at this particular point, and seeing how far it's going to end up falling down. Obviously, remember we have a point of control at 11,003 from that 11,243 area. So if I'm looking at this for the overall position, we can see that the weekly overall long term is still considered to be bullish, but we have somewhat of a double top right here, even with that being said. So I think the next few weeks, the market could possibly just be bearish if we're kind of paying attention to this overall movement. Now, yesterday was somewhat of an indication, especially at the end of the day. We've seen that the market basically ended up moving about 300 points to the downside on all of those. With that being said, I actually did not trade those, and I actually ended up turning off my system towards being able to trade anything because I wanted to see how the market was going to end up reacting towards this overall movement. So this is what happened. We ended up having this movement to the upside, fell down, and then pushed right back up to the upside again. So we have that as a movement right here. We had that as a top right there. The market has fell down. It's more of an in position. We should see that the market should fall down to right here if that does continue to move on from this particular spot. Okay, so I am interested in seeing how the market is going to end up reacting today. If we say that the market is going to end up being bearish, then there may be some opportunity to look at being able to take potential sales. The question is, did we miss out on the position because we didn't catch it earlier this morning, or are we just going to see a rally and the market just goes away from what I end up saying just because the market ended up having a 300 pip move to the downside yesterday? Only way to know that is by taking a look at the 2 hour. If we look at the 2 hour, we can see that. If I zoom out, we can see the break that ended up happening. We had a counter trend line break. We had a strong move at the end of the day for this overall movement. Currently, right now, the market is in the no trade zone, and we're seeing that the market is starting to push back up, which means that going into the 9:30 open, I probably wouldn't look at seeing people look to be able to sell, but I would look for a counter trend line break to the downside. Now the question from here is, where's the market going to potentially go if that happens? The way that you can easily look at that by doing your fibs and kind of seeing what's happening with that overall movement. We go from here to here. That's your first movement. So here to there. There goes your second movement. Market went all the way up to the 8.6. Market ended up hitting the 8.6. So the D extension ended up getting hit. So we can get rid of these two right here because that fib has completed. Next movement will end up being from here. Basically to that right there. So next fall position, if it does continue to fall, we end up being 11,723, which makes sense because that's a 377 moving average when it comes down to that overall position on the weekly. But I still do expect that the market is going to end up pushing up first before actually doing this. So even still, I'm not necessarily interested in being able to take a position on that. Let's take a look at the SPX 500. Tesla ended up getting placed into the SPX 500 early on Monday. And right now what I'm seeing is somewhat of the same thing, but I'm seeing consolidation for this overall movement. We see that we have the strong support at 35.55. So yeah, so 35.50 basically. The market has had resistance at 36.26. Let's go to the daily real quick. Let's see what's happening. Market is in the sell zone. We end up having a W pattern, which is the complete opposite. We had a double bottom. Market went up, went back to the bottom. Right now, we're seeing the market start to push up. if we're focusing in on just that position in general, the market should look to be able to push. But I wouldn't want to trade this yet because I am looking to be able to buy. I would actually want the market to be able to give me a lower price. From that lower price, I would like to be able to see that that we end up getting a counter trend line break and then start to push up to 37.60. So I'm going to remain to be out until the market gets into the buy zone, and then after that, then I will look at being able to make a trade for with that one. We got a little bit more time. Let's take a look at the let's take a look at US 30. Same movement. We had that double bottom that ended up happening right before the election. And then from there, we end up having a strong movement. So there goes your bottom right there, pushed up. There goes your bottom right there, pushed up again. We're seeing that the market is doing a slight retracement. The market never hit the D extension at 30,479. And right now, we end up having it break out of this overall. I'm going to call it consolidation because there was some areas of where the market ended up having resistance, which was at 28, basically at 28,800. So what I would look to see is if the market falls down to 28,800 and then bounce back off, once it ends up giving that type of break, then I would look at being able to buy it up once it hits back down to that position. So what does that mean for today? That means that the market should fall down again, fall down. Okay, should fall down again today for its overall movement. I wouldn't want to buy this until the market gets into the buy zone. I wouldn't turn on any of my systems until the market gets into the buy zone. But I would say, and I'm going to write this down today so we can be able to look at this and see if we're going to get back into it later. Look to enter the market bullish once the market tests the 28 level. And if the market is in the buy zone. Okay, so pretty simple. We're going to wait. We're going to see how the market kind of reacts. Once it gets back into this overall zone at 28,800, if the market starts to bounce off of this overall area and then gives you an opportunity of being able to get in, that is the area that I would look at being able to buy right around this overall area that I'm blowing up this arrow at. Once we end up getting that, if that does happen, then after that, we'll look at being able to buy it. Until then, we're going to stay away from it and be able to go from there. We've talked about everything. We literally got through everything on this overall today and being able to take a look at it. Once again, not a lot of trading pairs. And quite frankly, if you are in trading pairs, and either you're up and you're up slightly, or you're down and you're down, and you may be down and down just a little bit just because of the market being in consolidation based off of that range. So at this particular point, it's one of those things where you might just want to be patient and kind of see how the market is going to end up playing out. Or what you could be able to do is kind of you could be able to lower some of your risks and kind of give away some money and be like, okay, well, I'm just going to lower my risk and see where the market is going to end up going. Then after that, once you end up getting a direction where the market is going to end up going, then after that, start to be able to trade in that direction. Especially if you're not in any type of trading pair, that's the best thing that can be happening right now. You have your money on the side, your money is not at risk at this particular point, and going from there. Now, if your money is at risk, then this is a point to where you cannot panic, but at the same time, you do need to understand that if the market goes against the direction that you end up trading, that you got to be quick and decisive about being able to get in and get out. Okay. You like what we end up doing, please make sure that you like the Carter Cow Capital business page. Please make sure that you end up subscribing to us on Trade with Travis. Please make sure that you end up dropping in a comment, and also make sure that you end up hopping inside of our Believe in Yourself Bootcamp. Remember, it's November 23rd to the 27th. We're going to end up going from 9 p.m. to 10 p.m. each and every day. When it comes down to being able to hop in towards those sessions, you're interested in being able to do it, you go back to the links that we end up placing in. You can be able to hop into that session and go from there. Like always, make sure that you end up planning your trade your plan. Everyone, y'all end up having a good one. See you Friday. Take it easy.